Hey everybody, Scott Carson here with your note term of the day. Today's note term is S&D. What does S&D mean when it comes to loans? Now, S&D stands for scratch and dent. Now, if you've ever gone to like an unclaimed freight place, or oftentimes a lot of rehabbers will go to like the appliance place where there's scratch and dent, where it's still a perfectly good washer or dryer or refrigerator, but maybe it's got a scratch on the side or in the front or in the back, still operates perfectly as an appliance. And it's the same thing kind of in the note space. Now, a scratch and dent loan could be a very good note, a mortgage where the borrower is still paying on time, but there may be some issues with the underlying mortgage documents. There may be a disclosure that wasn't signed. There may be a FICO score that's off in some cases, where maybe the parent bank that was going to buy the note from the underlying lender, the FICO scores weren't accurate. They needed a 620 FICO score and it was only a 619. So scratch and dent loans are not bad. Usually they're going to trade pretty close to par or full value, or somewhere in the high 90s, especially if it's a performing note. If it's a non-performing note, obviously it's a different aspect of things. But a lot of sellers, a lot of traders right now, you're seeing S&D loans or portfolios of scratch and dent loans being traded or trying to be sold on the secondary market. And oftentimes, like I said, there's not that big a discount because still a perfectly good borrower, a perfectly good note. There's just a signature, a notary didn't notarize something. Something's missing from the document. So it's not exactly clean and perfectly pristine paper, but it's pretty damn close to it. So scratch and dent loans, we don't usually buy a lot of scratch and dent loans just because there's not that big a discount. Sometimes you can find some pretty good stuff on scratch and dents where it's newly originated. Maybe it's an owner finance deal that could be a scratch and dent where the borrower is not following through, or maybe another thing besides scratch and dent, it could be that the borrower is completely paying like 25 days late or 7 days late. They're not paying consistently on their due dates, but they're still paying before they're 30 days late. And sometimes that would be considered a scratch and dent loan. People paying, but just not consistent on the first of the month or before the 5th of the month. So late fees may apply to that as well. So keep that in mind. Scratch and dent loans, great if you've got cheap money, cheap financing, or using your own funds and you want a pretty decent rate, because it's going to trade, like I said, pretty close to par with a little bit of a discount, and depending on what the underlying interest rate is, that will obviously determine your yield. So keep that in mind. Scratch and dent loans, you're seeing a lot more of those pop up as we've seen a lot of mortgages increase. You see a lot of this on government secured loans in a lot of cases. But like I said, you've got to understand what type of discount. You'll ask what kind of color or discount you're going to be taking off of par, or the unpaid balance, I should say, sorry, not par, but the unpaid balance to determine your yield. So like I said, we don't buy a lot of scratch and dent loans, but we do buy plenty of other performing paper out there as well. So keep that in mind when you're looking at deals out there. So that's your note term of the day. What is scratch and dent loans?